Tesla shares under pressure after the EV company narrowly missed earnings estimates and warned that its expansion will be notably lower this year. Phil LeBeau joins us right now with more. And Phil, those words notably lower were their words, and I think that's part of the concern.
Yeah, that's the concern, Becky. Also, most people expected, I shouldn't say everybody, but most people expected Tesla to give us some kind of a number in terms of deliveries for 2024. Instead, you got notably lower growth in 24 than in 23. So let's talk about the numbers first, and then let's talk about the outlook. They did miss on the top and the bottom line, but the gross auto margins, excluding the zero-emission vehicle credits, they came in better than expected. 17.1%. The street was expecting 15.7%. But there's the key right there. 2024 deliveries, the company says they will be notably lower. Slower growth in 24 than in 23 in terms of how much deliveries grow annually. When you look at their annual deliveries, they hit 1.8 million last year. They were up 24% in 23. Go back to 22, they were up 40%. Now you're not sure how much they're going to grow in 2024. Here's Elon Musk on the conference call talking about why the slowdown is happening as they transition to the next generation vehicle they plan to build.
The first manufacturing location for this will be at our Gigafactory and headquarters in Austin, Texas. And then we'll follow that up with other locations around the world. Probably the factory we'll build in Mexico will be second, and then we'll be looking to identify a third location, perhaps by the end of this year or early next, outside of North America.
Left unsaid during the conference call was the fact that the EV market overall, for all automakers, it is slowing down in terms of the rate of growth relative to what we saw in 2023. It's still growing, just not as quickly. Tesla finished 23 number one in global EV sales, but in the fourth quarter, it was topped by BYD out of China. And during the call, Elon Musk talked not just about Chinese EV companies, but Chinese automakers overall, and the fact that they are expanding rapidly around the world. They're very good. And if the world, in terms of countries, are not prepared with trade restrictions, that the Chinese are going to demolish. And that's the word that Elon Musk used, demolish the competition. Quickly take a look at shares of Tesla over the last year. The energy storage business, a bright spot in the report, up 30% year over year. But there really wasn't a whole lot to like in this, guys, largely because of how vague they are about vehicle deliveries happening in 2024. How much are they going to grow?
I mean, I guess that's better than making numbers up when it's a pretty hazy outlook. Phil, we were just talking about it off camera. Joe was making the point that if you can't move Teslas, it just is indicative of the EV market overall. You saw some huge growth, some pushes behind it, but this is going to be a very different year for everybody.
And remember, they have a different dynamic in terms of the Gigafactory in Shanghai and the competition that they are facing in China from the electric vehicle companies over there. And the overall market for autos in China has been slowing down. And so you have this capacity that is there that the Chinese automakers are saying, well, first of all, we got to boost our sales at home. Let's force others to cut their prices. And by the way, we still have extra capacity. Let's start shipping these vehicles around the world. That's what he's talking about in terms of the Chinese automakers, not just when it comes to EVs, but the overall market.
Hey, Phil, are you going to bring us or drive a Yang Wang U9? Have you seen that? The ultra EV sports car from BYD? They're serious about it.
I've seen it.
Is it a good car?
They are.
Is it?
I assume that's what Elon Musk
BYD is a great company, Joe. You cannot. Look, I mean, everybody cool that I've talked with who has spent time, they're cool looking, and the quality is there. Not just with BYD, but with a number of the Chinese EVs. I've been in them in Europe. You're not seeing these Chinese EVs, and you won't see them around here anytime soon.
Hey, Phil,
given the trade restrictions that we have.
Phil, I love the honesty.
Say that again?
I love the honesty that Elon had on that call, which was to say, if we don't do something about tariffs, these cars are pretty great. You're going to have to do something here. But at the same time, I'm thinking to myself, Elon has a huge business in China. Aren't the Chinese looking at him saying that?
Yeah,
saying,
because he's walked a very
what is going on
fine
here?
line to this point.
Sure, they are looking at him. And look, you can't, Tesla imports EVs that are made in China into North America. They're brought into Canada. Some of the models that are built in China are brought into Canada and sold in Canada. We don't bring EVs built in China into the U.S. because of the trade restrictions. There's a 25% tariff. So it would make it prohibitive for a company to build a vehicle or for Chinese automakers to build in China and then ship over here to the United States. But that's what he's talking about. If you don't put some of these restrictions in place, you can look around the world, and I've been in Europe. I know you guys have been in Europe. I am sure when you guys were over at Davos, if you took an Uber, you probably were taking a Chinese vehicle. I did.
They didn't let any
Last time
Ubers
I was in
town.
Europe, me and my producer were in Chinese vehicles, all of the Ubers.
Hey, Phil, very quickly, you talk about BYD's quality. They're already telling us where to go, but I'd love to get your opinion on the latest with Boeing, the quality issues there, what this means, how serious this is.
It's very serious. Look, they can't expand production until the FAA is satisfied that the culture, the safety culture at Boeing is 100% better. I mean, that's being very blunt about it. The FAA is looking at Boeing right now and saying, you got to do the basics of blocking and tackling a lot better than what you've been doing in the past. And it's not enough to say that we're going to put inspectors and we're going to improve things. We want to see it. We want to see proof that you are improving your safety culture. And that's why they're limiting production. That production limit, it'll be interesting to see what Boeing says next week about its guidance long term. Remember, they plan to get up to 50 per month in terms of max production by 2025, 2026. That's also going to be driving the free cash flow target that they've set out there. I think it's $10 billion annually in 25, 26. Does that change now? And if that changes, that probably changes your outlook as an investor in terms of, well, okay, am I going to hang on to Boeing here and wait for it to finally kick in terms of the free cash flow? This is a significant move by the FAA.